Manufacturing accounts. This is our topic, and the module is about manufacturing cycle. In this module, we will learn that what are the different processes through which this manufacturing entity passes on, and then ultimately we get the end result, which is the cost of goods produced. Okay, so please be attentive. We will discuss this thing through a diagram, and this diagram is telling us that there is a cost of direct material with us, and that cost of direct material with the adjustment of material inventory will become cost of direct material consumed. Okay, when we are saying adjustment of material inventory, it means opening inventory plus and closing inventory minus. In the purchase of direct material cost, we get cost of direct material consumed. This direct material consumed is taken to the workshop. Okay, so I'll advise you to just visualize that you are in a factory and there is a workshop. Remember that material is supplied from the store. It is consumed in the workshop. Okay, so in the workshop we will put some labor cost, okay, and other direct costs and factory overhead cost. Now we know that factory overhead cost includes indirect material cost, indirect labor cost, and indirect other costs. Okay, so all the costs will be put in the workshop, and in that workshop we will be having work in process inventory. So all these costs will be worked out with the work in process inventory and will produce cost of goods manufactured figure. So this cost of goods manufactured figure will be adjusted with finished goods, because this is the cost of finished goods. You can say cost of goods manufactured is the cost of finished goods, the goods which we finished or produced during this accounting year or reporting period. Then this cost of finished goods is adjusted with the finished goods inventory, which means the opening balance of inventory of finished goods and closing balance of inventory of finished goods is adjusted with this cost of goods manufactured, and ultimately we get this figure, which is cost of goods sold. So this is the cycle that we must understand, that how a manufacturing entity works out its cost of goods manufactured, and then ultimately how it is taken to the cost of goods sold. So the important tips to remember in this module are that we have three types of inventories. Okay, material inventory, work in process inventory, and finished goods inventory. Here one very important thing that you should understand, that when we say material inventory, there will be direct material inventory with us, and there will be indirect material inventory with us as well. So direct material inventory will be worked out when we are calculating the cost of consumption for direct materials, and indirect material inventory will be worked out when we are working out factory overhead cost. So indirect material purchased will be adjusted with the opening and closing balance of the indirect material inventory. Okay, thank you very much.